XLM is about to make history overnight. All-time high incoming. Everyone's watching Bitcoin flirt with six-figure resistance. Ethereum gas fees are back in the headlines. Meme coins are pumping like it's 2021 again. The noise is deafening. Retail is hypnotized by the same old distractions, high volatility, influencer hype, and casino-style plays. It's the kind of environment where most people completely miss the silent giants that are actually setting up the next parabolic move. And right now, Stellar's XLM is doing exactly that. Quiet, controlled, strategic, and primed. What we're seeing unfold beneath the surface isn't just a price setup. It's a structural repositioning of XLM that could go down as one of the most overlooked breakout plays of the decade. And while the crypto herd is stampeding into hype-based projects, Stellar is arming itself with fundamentals, network growth, and institutional-grade integrations that are rarely discussed in public forums. Let me be very clear about this. XLM's next move won't be gradual. It won't be another slow grind back to 20 cents, 30 cents, or even 50 cents. If the current data holds and momentum continues to build in the corridors we're watching, it's the kind of ignition point that could erase years of sideways action in a matter of hours. We're talking full-scale launch, all-time high, overnight. And here's the kicker. It's not happening by accident. XLM isn't playing the same game as 90% of crypto. Let's talk strategy for a moment. Most crypto assets live and die by the hype cycle. A new narrative, a fresh pump, a few viral tweets, and boom. Short-term price action surges before crashing just as fast. But XLM is not built for hype. It's built for global infrastructure. Stellar Development Foundation isn't running a marketing campaign. They're running a multi-year regulatory-first financial rollout that just now is entering an execution phase, unlike anything we've seen from them before. This isn't about being flashy. It's about being foundational, and when you zoom out, the picture becomes clear. XLM is being positioned quietly but aggressively as a core settlement layer for compliant digital finance on a global scale. This includes direct integration with MoneyGram, creating a real-time bridge between fiat and crypto rails across 180 plus countries. Partnerships with institutions like Franklin Templeton, launching tokenized securities on Stellar. The rise of Pelago Labs' Stellar DeFi Hub, bringing tokenized trade finance to the blockchain with real-world borrowers, and the recent introduction of EON, a compliance-first token built by the SDF itself, targeting regulated institutions looking for a scalable, programmable asset. So why does this matter for price? Because every one of these integrations, every one of these partnerships represents real-world demand for XLM as a liquidity and transaction layer. And when demand quietly stacks while supply remains fixed and tight, price doesn't just move, it rips. On-chain receipts, the accumulation nobody's talking about. Let's dive into the receipts. While retail is asleep at the wheel, whales and institutional wallets are waking up. We're seeing it on-chain in several key areas. One, smart contract activity is exploding on Soroban. The rollout of Soroban Stellar's smart contract platform has dramatically changed the developer landscape. In the past 90 days, we've seen a 7 times increase in Soroban contract deployments, new DeFi primitives being tested, liquidity pools, yield aggregators, lending vaults. Pelago Labs onboarding institutional partners for tokenized invoice financing, a spike in unique contract interactions, suggesting more than just tests and net experimentation. It's live engagement. Now, think about this. Smart contracts are not just tech. They're gateways to utility. The more contracts deployed, the more transactions are required to settle logic and what token underpins those transactions. XLM, as Soroban matures, XLM doesn't just remain relevant, it becomes infrastructure. 2, real-world volume is finally showing up. 2 words, MoneyGram and EON. The MoneyGram integration is already live across 180 plus countries supporting instant fiat to crypto and crypto-tote conversions. But the bigger story is what's happening behind the scenes, increasing settlement demand for XLM as a bridge asset. Then there's EON, a tokenized asset on Stellar with full compliance baked in. Early on-chain data shows EON transfers spiking with 64% of flows occurring between known institutional wallet addresses. That's not trading noise, that's settlement movement, that's early enterprise adoption. You don't get that with meme coins. You don't even get that on Ethereum right now, not without insane gas fees. On Stellar is happening with 0.00001 XLM per transaction. Instant, scalable, regulatory safe. 3. Supply is quietly tightening. One of the most overlooked XLM metrics right now is distribution. XLM supply is capped at 50 billion. And thanks to EA, our liar burning events, only 24.7 billion are in current circulation. But here's where it gets interesting. Distribution from the Stellar Development Foundation wallet has dramatically slowed. According to the most recent transparency report, SDF only distributed 300 million XLM in the last 6 months. Over 70% of that went toward co-system grants and developer rewards, not liquid exchange sales. OTC sales to partners are being throttled, meaning less market dilution. What does that mean? It means net circulating supply is barely moving, while demand, real institutional on-chain demand, is rising. That's the definition of a supply squeeze. And when it happens to a liquid token like XLM that's already on every major exchange, explosive volatility is inevitable. The macro window is wide open and Stellar's built for it. Zoom out even further and the setup gets even more bullish. We're entering a macro environment tailor-made for XLM's breakout. Central banks are accelerating digital currency strategies. Stellar's CBDC sandbox with DFS Lab and global partners is already live. They're helping governments prototype stable coins on a permissionless ledger, aka Stellar. US regulatory clarity is finally approaching. The crypto market just saw bipartisan support for crypto regulation around stablecoins and token classification. Stellar, as one of the most compliant first chains in existence, is already prepared. EON, as a programmable, regulatory-friendly token, may become a template asset for future institutional DeFi. Emerging markets are demanding stable, accessible payment rails. Guess which chain powers some of the largest on- and off-ramp corridors in Latin America, Africa, and Southeast Asia? That's right, Stellar. And it's happening without flashy headlines. In other words, the macro environment is catching up to Stellar's blueprint. While others are still building narratives, Stellar already built the infrastructure, and now the world's economic systems are waking up to it. This is not 2017. It's not 2021. It's the real deal. Now let's get brutally honest. We've seen XLM pump before, once in 2017, then again in early 2021, but both times those were largely driven by speculation, not substance. Today it's different. We have regulated use cases launching. We have DeFi primitives that institutions can actually touch. We have developer ecosystems building real-world products with Polygo and Soraban. We have fiat rails and enterprise integrations with MoneyGram. We have compliance-ready digital assets like EON gaining traction. This is not just another run-of-the-mill bull cycle. This is the infrastructure cycle, the execution cycle, and that's where XLM thrives. Most people aren't ready for what happens when real-world volume meets cap tokenomics and full retail attention kicks in again. You're early, but that window's closing fast. Let me put this as clearly as possible. If you're looking at XLM under 20 cents right now with everything we just laid out, you're still early. But this kind of setup doesn't linger, and it definitely doesn't warn you before it explodes. All the catalysts are here. Tight supply, rising institutional utility, global macro alignment, smart contract expansion, real-world on-chain volume. The only thing missing tension. And that's exactly why this opportunity is so dangerous, because once the spotlight hits, it's already too late before we move on. Now, before we break down exactly how high XLM could go, and the hidden price signals pointing to a possible overnight all-time high, do me a quick favor. Smash that subscribe button on Be Crypto Smart. This channel isn't here for hype. We break down real fundamentals and emerging market signals long before the rest of YouTube even notices. If you're betting on underdog assets like XLM that actually have a long-term runway, you're in the right place. Alright, buckle up, because in the next section, we're going deep into the indicators that prove this isn't just a theory, it's already happening. Institutional demand surge, the hidden on-chain signals no one's talking about. If you want to predict where price is headed before the breakout, You don't follow influencers. You don't chase trending tokens on Twitter. You follow the capital. And right now, capital is quietly positioning into XLM, not loudly, not in headlines, but in on-chain footprints that retail isn't even looking at. Let's rip into it. In just the past 90 days, the Stellar blockchain has lit up with an undeniable 37% spike in large wallet accumulation. That's wallets holding between 1 million and 10 million XLM, buying, not trading, not flipping, accumulating, and holding. Now pause and think about what that really means. These aren't weekend traders. These aren't Discord groups throwing darts at micro caps. These are funds, family offices, desk capital, quiet money with long G-time horizons. The kind of players who don't move without due diligence, compliance review, and access to privileged market intel. So why are they loading XLM? Because they see what the public hasn't caught onto yet. Stellar is transforming from a payments protocol into a full institutional-grade financial layer, and that shift is accelerating fast. Let's go deeper. Since the start of Q2 2025, Sorbonne smart contract deployments have doubled. Doubled. That's not speculation. That's verified on-chain. That's developers actively building, not just writing white papers or applying for grants, but shipping code, launching contracts, testing systems, and scaling live protocols directly on Stellar's programmable layer. This is key because Sorbonne isn't a retail playground like Ethereum meme tokens or Solana casino coins. Sora is optimized for compliance-first smart contracts. It's built for institutions, regulated environments, and DeFi apps that actually intend to plug into the real economy, not just play token musical chairs. And what we're seeing is exactly that. Real builders, real contracts, real economic activity. Take Palo Laboratories. They're deploying smart contracts for on-chain credit issuance and trade finance. Not theoretical, not MVPs. Live operational, integrated. You've got trade finance flows from emerging markets running directly through Stellar rails. You've got stablecoin liquidity anchored by MoneyGram's fiat ramps in over 180 countries. That's not just crypto native movement. That's global on and off ramps moving physical cash, tokenizing real world value, and doing it through XLM infrastructure. And while retail is still refreshing coin market cap and waiting for a pump, TradFi is watching this unfold in real time. Let's name names. Visa is expanding its USDC pilot on Stellar. They already trialed it across Solana and Ethereum. Now Stellar is being positioned as the backbone for cross-border remittances. Why? Because of speed, cost, and regulatory comfort. Franklin Templeton is building tokenized mutual fund products. And guess where they're quietly experimenting? On public ledgers that support compliant architecture like Stellar. These aren't vaporware experiments. This is real fund infrastructure being digitized and tested for scale. And Circle, they just confirmed that Stellar will be one of 3 chains to support their euro-denominated stablecoin. Eurocoin with specific focus on CBDC-aligned pilots across the EU. That's Circle choosing Stellar alongside Ethereum and Solana. You don't get into that lineup by accident. What this all signals is simple but explosive. Institutions no longer see Stellar as that payments token from 2017. They now recognize it for what it's quietly become: financial infrastructure. And here's the crazy part. None of that is priced in. XLM is still trading like it's 2022, like it's some zombie altcoin stuck in a sideways channel waiting for Bitcoin to drag it up. But under the hood, you've got capital flows surging, you've got smart contract activity doubling, you've got TradFi infrastructure onboarding. This is the part of the movie where the setup is done and the explosion is cued. Because when that price volume disconnect finally snaps, you're not going to get a slow grind up. You're going to get a vertical candle that erases disbelief in a single day. And by the time the headlines catch up, by the time influencers start screaming about XLM hitting $1, it will already be halfway to price discovery. And guess who will be selling into that pump? The same wallets accumulating right now in silence with 8-figure entries. This isn't hype, it's preparation. Supply shock loading. Why XLM's token dynamics are designed for explosive breakouts. Here's a hard truth most crypto investors still haven't figured out. Price doesn't move because of hype. I moves because of imbalance. Specifically, when demand increases faster than available supply, you don't get a slow and steady rise. You get dislocation. You get panic bidding. You get parabolic candles. And that's exactly what Stellar is setting you. P for right now. A precision-engineered supply shock that 99% of the market hasn't priced in. Let's talk mechanics. Back in the early days, XLM had a massive token supply. Billions of units open to inflation, with critics constantly calling it overprinted. But that's old data. Fast forward to now, and Stellar has one of the cleanest, most disciplined tokenomics models in the top 50. Here's what you need to understand. First, inflation is gone. Stellar permanently eliminated its inflation mechanism in late 2019. No new XLM is created ever. That alone already gives it a deflationary edge over ecosystems like Ethereum, where gas burning is still unpredictable. Second, the token burn was massive. In November 2019, the Stellar Development Foundation, SDF, executed a drastic token burn, cutting over 55 billion XLM from the total supply. That's a 50% plus supply shock in one move. Why? To make the tokenomics sustainable, to kill the over-upper, and to lock in long-term scarcity. But it gets better. The circulating supply is slowing down. SDF still holds a large portion of the remaining tokens, but the release rate is now tightly controlled, and over the last 12 months, token disbursement has slowed to a crawl. The Foundation's transparency reports confirm this. Fewer ecosystem grants, fewer airdrops, and a greater focus on ecosystem utility instead of token emissions. In plain English, there's less XLM hitting the market than ever before. Meanwhile, demand is increasing. Palo Labs is locking XLM into trade finance credit pools. Developers deploying Sorband contracts are using XLM for fees. MoneyGram users are moving fiat to crypto through XLM rails. And stable coins like USDC and Euro are settling on Stellar in real time, driving transactional throughput that requires underlying liquidity. Now here's the punchline. That demand spike isn't being met with new supply. It's not being met with inflation. It's not even being met with unlocked SDF reserves. It's being met with scarcity. That's where the game flips, because what you have now is an asset that's doing everything right. Real utility demand. Token burns in the past. No inflation, slowed distribution, deep integrations with fiat on-ramps, developer usage growing through Sorbonne, and yet XLM is still trading under 20. You think that's going to last? Here's how this plays out in market terms. As demand pushes up slowly at first through smart money accumulation, the available XLM on exchanges starts to dry up. Liquidity thins out, order books get tighter, and when retail finally wakes up, there's not enough XLM to go around. That's when you get the supply squeeze. That's when traders go from placing limit orders to hitting the green button at market. And that's when price action doesn't just rise, it teleports. This is how assets go from range-bound to vertical in days. This how Solana exploded from 3 to 60. That's how Chainlink ripped from 1 to 20. And it's exactly the kind of setup Stellar is now entering, but with cleaner tokenomics, deeper regulatory alignment, and real-world use cases anchoring demand. Make no mistake, XLM is building a powder keg of value compression, and when the spark hits, you're going to see historic breakout velocity, because price always follows fundamentals. But when fundamentals tighten supply and jack up usage at the same time, that's not a price move, that's a reset. Utility, not hype. Why XLM's fundamentals just flipped bullish in a way even XRP can't match. Let's take a step back and zoom out from the noise. Because while crypto Twitter obsesses over pump and dumps, L1 tribalism, and the latest next big thing, something far more important is happening beneath the surface. Stellar isn't riding hype anymore. It's riding utility, and that changes everything. This isn't 2017. It's not about buzzwords like borderless payments or banking the unbanked with no product to back it up. XLM is now powering real-world infrastructure, not in a proof-of-concept sandbox, not in a developer testnet in production globally at scale. Let's break it down. Stellar now operates as a two-tier financial engine. Tier 1 base layer payments. This is Stellar's original strength. ultra-ast, ultra-cheap remittances. We're talking sub-second confirmations near zero fees, global reach across 180 plus countries. This base layer is the reason Stellar's been integrated into MoneyGram for fiat ramps and cross-border cash pickup. Circle for stablecoin settlement in emerging markets. Tempo, Vel, and Settle Network for on-chain FX and international liquidity rails. And now Eon, which is handling billions in remittance volume with Stellar powering the back end. The numbers are no longer speculative, they're measurable. Stellar network throughput has scaled into millions of transactions per day. Real-world value settlement has crossed $1 billion plus and climbing. On-chain wallet usage continues growing, especially across Asia, Africa, and Latin America. That's not hype, that's usage. Tier 2, smart contracts and open finance. Sorbonne, this is where the game changes because while other chains brag about NFT mints or gambling DAPs, Stellar went a different route. It built Sorbonne, a purpose-built smart contract layer focused on regulatory-grade DeFi, tokenized real-world assets, and enterprise use cases that don't break the law. Let that sink in. Stellar didn't fork Ethereum. It didn't copy Solana. It built a clean, secure, scalable, WSM-based virtual machine with compliance, speed, and predictability as core design principles. And developers are responding. Since Sorbonne went live, contract deployments have surged over 120% quarter over. Projects like Palago Labs are bringing trade finance on-chain through XLM-backed credit issuance. Real assets, fiat currencies, bonds, CBDCs are being tokenized across compliant ledgers. Programmable payment systems are being built directly on top of Stellar's Layer 2 using XLM as gas. This isn't vaporware. This is institutional-grade programmable money. And here's where it gets wild. Ethereum can't do this. Yes, Ethereum is the king of DeFi, but its limitations are showing. Gas fees spike during congestion. Throughput is capped. Front-running is rampant, and compliance almost non-existent. Try pitching Ethereum's DeFi stack to a regulated bank and see how far you get. Meanwhile, Sorbonne is running parallel to Stellar Space Layer, offering predictable fees, built-in account abstraction, secure native bridges with no centralized custodians, and full compatibility with fiat-backed assets, licensed issuers, and tokenized off-chain instruments. That's why Circle, Visa, and multiple regulated entities are now building with Stellar, not Ethereum. Even XRP can't match the structure. Ripple is great for institutional transfers, but it's a closed system. You need permission to participate. It's designed for banks, not builders. Stellar flip-through model. It offers the same compliance-first backbone, but with an open permissionless innovation layer. That means you can build programmable finance apps, open liquidity protocols, decentralized stablecoin exchanges without losing regulatory compatibility. XRP is still struggling with developer traction. Sorbonne already has real deployments. XRP is fighting legal ambiguity. Stellar is fully open source and integrated with US financial entities. XRP is trying to layer on smart contracts with sidechains. Stellar launched Sorbonne natively, and it's working. Put simply, XLM just leapfrogged the competition in the one way that actually matters. Adoption that scales with compliance. So what happens when price catches up to this reality? You get a chain that's powering hundreds of millions in remittances, providing the smart contract layer for tokenized debt and credit, hosting CBDC-compatible stablecoin flows in multiple regions, running low-cost, high-throughput rails that meet both retail and institutional needs, operating with a capped deflationary supply model, and integrated with legacy giants like MoneyGram, Visa, Circle, and even the UN. And yet it's still trading under 20 cents. That's not just mispricing. That's historic dislocation. Because eventually the market realizes that hype burns out, but utility compounds. And when the narrative shifts, you don't just get a rally, you get a re-rating of the entire asset. XLM isn't trying to be Ethereum. It's not trying to replace XRP. It's doing something more precise, more surgical, and far more scalable. Becoming the programmable payments layer for the global digital economy. And here's the real alpha. Price hasn't even started to reflect that yet. Price targets, market psychology, and the setup for an all-time high breakout. Let's drop the theory. Let's get tactical. Because if you've been watching XLM from the sidelines, this is where things get real. Here's the math that should stop every serious investor in their tracks. XLM's all-time high, 94 cents. That was during the 2018 retail-driven mania back when Stellar had almost none of the adoption it has today. In 2021, when everything was flying off the rails, XLM topped out around 79, but never reclaimed its full previous high. Fast forward to now, XLM is trading between 15 cents and 18 cents. That's an 80% discount from its peak. But, and this is critical, it's also the most fundamentally sound, integrated, and widely used it's ever been in the asset's entire history. The question isn't why isn't it moving? The real question is, how long can this level of dislocation last before price snaps violently back to fair value? Let's break it down. Narrative lag is the setup. Right now, XLM's biggest obstacle isn't technical resistance, it's narrative lag. Retail investors are glued to hype cycles, meme coins, gambling tokens, overnight 100x pumps, followed by 99% dumps. That's where the attention is. Meanwhile, XLM is doing what none of those assets can, powering real-world remittances at institutional scale, hosting smart contracts that meet regulatory standards, driving stablecoin flows through compliant FX corridors, facilitating trade finance protocols like Pelago Labs backed by on-chain credit issuance, being chosen by MoneyGram, Circle, the UN, and others to settle value across borders. This isn't speculation, it's execution. But that's the exact kind of mispricing setup we look for as early movers. Because the moment attention rotates from memes to utility, the re-rate will be instant and violent. Here's what that breakout looks like. Let's walk through the price action roadmap. First breakout level, 25. This is the wake-up level where sideline capital starts rotating back in. At this point, algorithms start sniffing volume. Social metrics trend upward, and influencers begin pivoting their narratives. Second psychological level, 35 to 38 cents. This is where retail notices. You'll see X Twitter filled with is XLM pumping posts. Exchanges start sending push notifications. FOMO begins to build. Third key level, 55 to 60. At this point, institutions that have been quietly accumulating start getting aggressive. Liquidity thins out, order books gap. And that's when the real squeeze happens. Breakout trigger in 94. This is the previous all-time high. Once XLM breaches this level, you're in full price discovery territory. Historical resistance is gone. Supply dries up, and market makers flip from suppressing price to chasing it. That move from sub $0.20 to near $1, it won't take months. Could happen in under 72 hours. We've seen it with Solana, with AVAC, with Link. Once a real-world narrative meets technical breakout, the market doesn't wait around. And this time, the fundamentals are stronger than any previous cycle. The psychology behind the setup. Here's what most people miss. The price floor isn't determined by technical support lines. It's determined by fundamental demand and real utility. When that floor starts rising quietly, organically, without hype, price lags behind. Until it doesn't, then you get the classic crypto phenomenon, sudden vertical repricing. But what makes XLM setup unique is this. Most altcoins pump, then hope the fundamentals catch up. XLM's fundamentals already flipped bullish. The price just hasn't reflected it yet. That's an inversion, and it's rare. Think about it. If Sorobon adoption continues to ramp, if trade finance volume keeps moving on-chain, if stablecoin flows keep hitting $300 million plus per month, if new corridors like Africa, Southeast Asia, and Latin America keep onboarding, and if global entities continue choosing Stellar as their primary blockchain layer, then we're not talking about a 94-cent ceiling anymore. We're talking about a launch pad. What happens after price discovery? This is where it gets serious. Once XLM enters price discovery above 94, everything changes. Algorithmic strategies activate by programs run autonomously. Fund managers start rebalancing portfolios to include real utility tokens. Centralized exchanges rush to list more fiat pairs, creating more access. Media coverage flips bullish, reinforcing feedback loops. Developers flood the ecosystem, chasing grants and new users. Liquidity increases, volatility spikes, and price becomes reflexive. And here's the most overlooked part. Retail will still be late because most retail investors won't believe it until XLM is already trading above $1. That's when Google searches explode. That's when the headlines hit. That's when panic buying begins. But by then, the asymmetric window is gone. Conviction over timing. Look, no one can time the exact candle that breaks resistance, but here's the real edge. If you understand why a breakout is inevitable, your entry matters less than your conviction. That's what most miss. They chase hype, they sell on dips, and they miss the one opportunity that doesn't need hype to succeed because it's being built on something bigger. Stellar is not riding market euphoria. It's riding macroeconomic demand for faster, cheaper, compliant, cross-border finance. That's not a story. That's a structural shift in how money moves globally. So here's the final takeaway. If Stellar continues to execute, and everything so far says it will, then $1 is not a ceiling. It's the beginning of a multi-year price discovery arc that could put XLM in the conversation with the top 5 crypto assets in the world. The setup is here. The fundamentals are real. The price is still asleep, but not for long. Be ready. Don't miss this window. This isn't a drill. This is the moment before the storm. The stars are aligning. The fundamentals are clicking. The adoption is real. Utility proven. Supply-constrained demand growing by the week. And yet, somehow, XLM is still trading like it's invisible. This is the part of the movie that only the early ones remember. The moment before the breakout, when the charts are boring, when the noise is elsewhere, when everyone's still chasing the next memecoin rug pull, while Stellar quietly builds the financial rails of the future. But that window, it doesn't stay open. Here's what happens next. The minute the spotlight hits, it's over. The second a major ETF fund allocates just 0.5% to Stellar as part of a real-world asset blockchain basket. The second TikTok influencers start pumping videos titled, "Why I'm Buying XLM Before It Hits 10." The second mainstream analysts slap a buy rating on XLM for its cross-burst settlement dominance. The asymmetry is gone. The front-running opportunity evaporates. You're no longer early, you're late. You're chasing candles, competing with bots, fighting against institutions who already filled their bags 6 months ago. That's why the decision has to be made now, not when XLM is already on CNBC. This is a setup that changes portfolios. Let's be blunt, these windows don't come around often. We're looking at a perfect storm. A token with rock-solid fundamentals. A global use case in cross-border payments, stablecoins, and trade finance. New smart contract utility through Soraband coming online now. Not someday. Compliance-first architecture in a world desperately hungry for regulatory clarity and a price that still reflects maximum disbelief. How many more signals do you need? Because this isn't just about making a trade. It's about positioning for the next cycle before the cycle starts. We've seen it before with Ethereum under $10, with Solana at $80, with Chainlink before it even got listed on Coinbase. Now it's XLM's turn. Ask yourself this before it's too late. When XLM rockets past $1, when the headlines are screaming, you should have seen it coming. When everyone suddenly becomes an expert on Stellar overnight, where do you want to be? Are you going to be one of the few who acted before the breakout? Or are you going to be one of the many who hesitated, ignored the fundamentals, and watched the opportunity pass from the sidelines because the next 30 days they won't just define the next quarter. They could define the next 3 years of returns. Final call, get ahead of the curve. If you're ready to frontier run the market, not follow it. If you're done chasing narratives that die in a week, if you want to understand the real moves before they go viral, subscribe to Be Crypto Smart. This is where we cut through the noise. No fluff, no hype, just cold analysis, real signals, and smart positioning before the market catches up. Because when XLM hits its